All right, welcome back to Investor Edge, simplifying smarter investing for everyone. I'm your host, Trent. Today is Monday, February 24th. Today I'm going to talk about a little bit of market recap overall, what's been going on, along with my adjusted views on some things and how I'm going to strategize for longer term positions. This is a really great time to look at that. If you've noticed in previous videos, when I mentioned swing trades or my swing trade watch list and things like that, I've talked about everything was within, kind of 1 to 2 to 3, maybe 4 or 5 days at most. Some people disagree with that opinion on calling that a swing trade. I'm going to call this more positional trading. It's kind of a hybrid. There's different terminology for it, but it's going to be a shorter term, positional trading, I guess you would kind of place it as. But before we get started, just a reminder, this is for educational purposes only. Please do not take any of this as financial advice. Do your own research before putting any money in the markets, as they are risky, and consult a financial advisor prior to doing so. So that being said, let's just pull up the chart first of the SPY S&P 500 index. I have the weekly chart up. So these are weekly candles and a simple, standard Bollinger Bands with a 20 SMA. That is the blue line going through. And you have the upper zone, the lower zones, which are standard deviations off of that 20 period moving average. So in this case, it's weekly, right? And so we're kind of in a point of confluence. So what are we going to see between this week, next week, and thereafter, right? But these are good times to find pullbacks, because if you've noticed, every time we get near these levels, or more often than not, and it's not very common, right? But obviously we've been in a major uptrend for quite some time. So I'm not one of the ones to say, oh, the sky's falling, sell everything, go short. It broke below the 600 level. A lot of analysts were treating that as kind of the bar, right, of where it needed to be. But every time it gets down these areas, we see rapid experience in volatility to the upside, to the downside, whatever it may be. But nonetheless, so what is my strategy going to be? I'm going to focus on a little bit longer time frame. I'm going to focus on potential reversals in stocks that are undervalued or oversold, whatever it may be, as we've seen in some recent bounces, counter to what the markets have been doing the last 2 weeks. For example, let's look at Nike. Now, one of my videos just 2 weeks ago, I was shorting Nike on a day trade on this particular week, as there was no buyers on that day, closing in the afternoon, stepping in to buy anything up. But however, look at the opposite performance just in the last 2 to 3 weeks. Now, is it still in a major downtrend? For sure, but we are getting to these levels that we haven't seen since April of 2020. That's huge. It's a 5-year period that we're getting down to. And last time we kind of got down to these levels, obviously, okay, so we did see them in 22, but we're even below that now. Now, is it still in a downtrend? Is it, but Nike is one of those companies it's just got a lot going for it, right? It's undeniable. So this is the type of thing you can look at and potentially find these longer term, time frames. Am I saying just jump into it now and hold and buy? No, but it's starting to feel like it's getting a sense of bottoming, right? It's doing the opposite of what the market's doing, which is a good sign. It means people are rotating into it as potentially a reversal, right? If they're seeing weakness overall in tech and other things that have excelled for the last few years. So it's just an example, just to have a kind of mindset behind it. Now let's pull up my notes and kind of going backwards here. So this week, several key events, could impact anyone's watch list. We have Nvidia set to release its fourth quarter earnings on Wednesday, which I got the date wrong on one of my last YouTube videos. So again, my apologies. I mentioned it 2 or 3 times. I don't know how I screwed that up. On one of the notes, I had it on the 26th, and then the other note, I had it on the 21st. I don't know why I was so off about that, but Friday afternoon, I was looking at my phone, waiting for earnings. I'm like, what's going on? It hasn't come out yet. But nonetheless, so no harm, no foul. But so definitely going to be an impact to the markets. We're definitely going to see some volatility come in, whether it be good or bad, or bullish or bearish. Let me change some of these slides over. Sorry. Additionally, Bureau of Economic Analysis will report the Personal Consumption Expenditures (PCE) price index on Friday, providing additional insights to inflation trends that could affect federal policy, right? Federal Reserve policy. And I was reading the Yahoo article today. Apparently, I wasn't aware. I guess the Fed really does treat this as its primary inflationary gauge, so they really like this one a lot compared to other metrics that we've seen. So right now, right, what are we seeing? Broader market is under pressure. Major indices pulling back after the strong run. I mean, it's been on a heck of a run, and we're going to continue to see that. We could see it bounce, right? So I'm not saying, go short in the market and things like that. I would, almost never. As long as these companies are still around, you're not going to have a very good career betting against them all the time. Now, you can do it in short time frames, and I'll talk about how there's strategies with that as well. So right now, I'm not doing any trades. I'm out of everything that's going to be within a few days, right? So I'm adjusting my approach and how I do this. This is kind of an older setup that I used to have that didn't, it works great when there are opportunities there, but it's hard when stocks are kind of trading above their earnings and things get, or price to earnings ratio, and things can kind of get really choppy towards those highs, but you still don't want to short them because it's hard to guess those tops, right? We kind of saw that with Meta, right? And I'll talk more about that when I pull it up on the chart. So S&P 500, NASDAQ have weakened. Why is this happening? Rising treasury yields, right? Higher yields make equities less attractive. They've kind of bumped up a little bit here or there. But more or less, it's going to be profit taking. Mega caps, a lot of the big names. We saw some selling pressure after earnings. That's why Nvidia is a big one. This is kind of the last one to come in and see what's going to happen. It's kind of, I think it'll definitely be that continued pressure, as I mentioned with Walmart, and how it, kind of got the markets going after a couple of days of nothing. What are we going to see here? Sector rotation, defensive plays, right? Some relative strength in utilities, healthcare, consumer staples, right? That's what we're going to kind of look at. Geopolitical, inflationary concerns for sure affecting broader market, with the tariffs and things like that. Rate cuts and all, inflationary, pressures are still out there. I didn't mention tariffs, but yeah, tariffs are definitely one of them. Which kind of affects every company. Apple just today announced they're going to do 500 billion or million, I forgot the exact number, of investment in the U.S. to bring some of their business over here, which is good. It's nice to see that American companies are making a response to at least do something. It might not be all their business, but it's a significant portion that's going to bring in jobs and things like that, and investment into, our borders. Overall, as I kind of showed you, I still believe market is in a healthy pullback. I don't think there's any full trend reversal here. Could see it speed up though. I'm not saying, everything I'm going to point out, I'm definitely not jumping into right away this week. I want to get the remainder of these metrics to come in. Even if there is more pullback, if things look okay, that's when I'm going to look for buying opportunities. And my, plan to hold 2 weeks to, maybe a month, maybe 2 months, things like that. On top of my long-term portfolio and on top of my normal day trading stuff that I do. So it's just a different approach, and people can, I hope you get some good information out of this and how, it can kind of help in times of uncertainty. So economic data looks strong. Corporate earnings aren't collapsing, right? Growth is still steady. So we should see that happen with the stocks as well. If you always follow the earnings, things can get, kind of crazy at the top, but you just got to continue to trade off what you see and trade off of the fundamentals behind it, and just wait for those good opportunities. So money is shifting into industrials, energy, discretionary stocks instead of just tech for sure. But we're kind of seeing a little bit of a deeper pullback with everybody. There was a couple of things green today, but really the last few days have been a lot of red across the board. So, but definitely some of them not as deep, right? But there's still some, kind of flatlining there. So, AI innovation themes, I still remain solid ideas. Obviously, things could change with Nvidia. I don't anticipate too much change. It could be volatile. You might see a retest of those 115 lows, or you could see it back at all-time highs at 150 plus or whatever. I still think earnings are going to be good. Guidance might be a little bit more conservative. Who knows, right? We're not going to know until they announce on Wednesday, and we go from there. I still think there's, all these companies have not changed their tune on investment within AI space, so why should anyone else? They're a lot smarter than us, right? We could probably all admit. Now, Meta, Amazon, those are kind of my top watch. Apple as well. I just prefer these two right now for kind of longer term. Meta selling off, a little deeper pullback. I think we may have a little bit more room to go, but I think there will definitely be some buying opportunities there. Whereas Apple's kind of settled back into that 240 range, which I like, but I don't really see the potential catalyst for that to get really beyond there yet. I don't know. I'll closely monitor all those, but I like where Amazon, Meta. Now, honorable mention. People might go crazy about this one. Intel, INTC. There was announcements of, was it Broadcom and AMD, or I'm sorry, I should have pulled up the notes on that. But the other day, somebody was talking to me about it. We were just talking about just purely on a fundamental basis. They haven't led, and they've been beaten down and surpassed by a lot of these companies. But similar to Nike, it has really bounced, and there was that little catalyst there of, again, company potentially splitting it up, buying it out, things like that. Who knows what's going to come of that? But either way, as the stock has performed, as the company is still doing okay, they haven't succeeded like they wanted to, but they're not dead in the water, right? So I think they're one of the ones kind of my tier 2 list of like could be a turnaround story, coming. But we'll see. So how am I adjusting my approach? Market's not just breaking out, moving away from shorter term swing trades. I'm focusing on more longer, some tactical position trades. Why does it make sense? I'm extending my holding periods instead of, within a week type swings that I did like every Sunday, which you could still do. Like, I'm still going to screen for those. And if I see something I really like, I'll talk about it. I'm just saying from a probability standpoint to be more on the winning side of things. I think it's a good time with these pullbacks as I'm looking at it to sit and wait a little bit longer, be a little more patient, and then also be a little bit more patient for the trade to develop in your favor. So I think, that's all coming with additional time. But I think we could have a little more room for some pullback. I wouldn't mind a little more settling in, kind of reestablishing some good support levels on a weekly, multi-week time frame, and then, we start back to the grind higher. But I want to see it do that with some of these stocks that are turning around a little bit too. So, buy strength and weakness, right? I'm going to focus on, solid earnings, fundamentals, things that are down simply because of overall market weakness. I'm also going to watch for sector rotation. I want to catch the industrials, energy, consumer discretionary as they gain some momentum. Hedging strategies, right? I'll kind of talk about this briefly. I do it with my longer term portfolio when things are really kind of taking a dive, or just pulling back. I wouldn't say really taking a dive, but when they're just being, trending down for an extended period of time. I use, put options on some stocks, on some of those. I've sold covered calls on them to collect a premium, waiting for the rebound. Definitely kind of an advanced strategy with that. Why do I do that? Now, I don't just like to, you can also buy inverse ETFs. I've talked about day trading those. I don't recommend just shorting stocks for long periods, especially anything that has any good, solid fundamental to it, right? Earnings per shares continuing to grow higher. Earnings estimates are being beaten. Cash flow is positive. Debt to equity ratio positive, right? Like anything that measures a company doing well, I don't recommend shorting it. It's just not, you can, it's doable. It's just really tough to do, and your timing's got to be right. But you can hedge your investments by by using the option strategies that are out there. Because, sometimes if I, for example, on a longer term position I may have, I may have a few $1,000s in something. Well, I'll take $100, $200. I'll risk losing that, on whatever time frame in order I can make 3x that depending on the contracts based on the short-term weakness, right? And that kind of offsets that, and then I just put that money right back into the company. I'm going to buy it down at those lower prices. So, but that's, again, it's more advanced strategy. And it's definitely something I just do with my longer-term stuff. You can do it with these swing trades. I probably won't, but you can use, if I'm completely wrong and the selling pressure picks up even more, the VIX is spiking, I'll use options to go against certain things to capitalize on the short-term moves. And I'm not going to be holding them, I'm not going to be planning on it for multi-weeks, but I'll be using those as leveraging. So hope that makes a little bit of sense. I think shorting anything overnight, for one, it's just like, not everyone, you only have limited funds, right? So you got to put them in the best places to be, and it's all about probabilities of consistency and follow through. So, so that was a little side note on that. I'm not going to talk about call spreads and stuff. Again, that's more advanced. So my final thoughts: I'm staying bullish, but I'm going to be selective. Adjusting my time frame, I'm going to shift from within a week type moves. I'm looking for 2-4 plus week positions. If I do hedge, I'll hedge smartly, not aggressively. I'll use put options and maybe some ETFs for inverse. I mainly do that. I use like the SQQs or something, during day trading stuff. Sometimes they're good opportunities if the overall markets are just weak. So, what do we got here? So let me get down to, now I'm going to talk about how I filtered for most of these, not all, but a good basic filter to understand fundamentally stronger stocks. So each of these filters helps identify fundamentally strong stocks while ensuring they're technically positioned as well. So I like PE ratio under 40. I like, because that still captures a lot of those higher growth stocks, so they have more movement. Forward PE under 35. This helps eliminate overvalued stocks while keeping growth stocks in play. So that's kind of and you can adjust those, and you can look into the exact metrics of those and find something that you prefer. EPS growth past and next 5 years positive ensures companies are growing earnings, not stagnate. Sales growth, I definitely want revenue growth, confirms demand and strong business execution. Revenue surprise positive greater than 0, ensures companies beat expectations, show financial strength. I just like everything positive. You can see the theme here. Return on equity, key of measure how well a company uses its shareholder capital. I want it positive. I want everything positive. Debt equity under 1, low debt reduces financial risk, ensuring companies don't rely on leverage, right? Gross margin ensures companies maintain good profit retention. Ideally higher, but I put it down to 10. Some of those companies don't have huge margins. It just depends on the type of business they're in. Operating net profit margins positive, helps avoid unprofitable companies. Definitely don't want to be buying anything that's not profitable, unless it's just a pure technical, pure whatever momentum play. That's not what these are. These are finding companies that have good values, good metrics to them, and getting them for a decent price based on some technical help. So that's the idea behind it. It's not beautiful and it's not rocket science, but it's going to align you with good probability and good follow through. So I generally like the price above the 200 SMA. Ensures stock are not in a long-term downtrend, but again, these are just like I adjust all of these based on other things to consider. INTC and Nike are, I think, both below the 200. So, but there's exceptions to the rule, so they're just kind of guidelines and not rules. My rules are more fixed on the trading and the size that I do. Everything else is just kind of guidelines and just seeing what you're, trading what you're seeing out there. So. I don't want it to be overbought, right? This kind of ties into the technical view. I want it to be more, 50 or below, maybe not down in 20 or 30. Still something, but coming off those lows. Float over 200 million ensures high liquidity, ease for trading. And I adjust my average volume to less than a couple million. Like my day trades, I bring it down to 500,000, just to ensure that stocks generally have pretty decent amount of volume going on. Okay, let's get into the stocks themselves. Tier 1, these are high conviction, strong fundamentals, growth combination. Stocks have strong financials, industry leaders, reasonable valuations, making them solid longer term holds with the upside potential. So obviously Amazon, why? It's best in class growth, leadership in e-commerce, cloud computing, fundamentals, high earnings growth, strong cash flow, AI-driven expansion. Technical considerations, recently pulled back, but still in an overall uptrend, kind of following broad market. Valuation remains high, but it definitely has justified growth, right? Same kind of boat for Meta. Apple again too. Apple's kind of holding at one spot. I like the movement to the downside or the pull-in that we're seeing with Amazon and Meta. Big market cap, price earnings, price currently, pulled back a lot. Why? AI monetization, recovery, strong growth, social media, whole 9 yards. Strong earnings growth, massive user base. They got a lot of AI involvement. Pullback, overall still bullish. Risk on this one, heavy spending on, was it Realty Labs? That's their development side of things. Definitely a lot of investment going on at that. We'll see if anything major comes out of it, which would be pretty cool. That will help fuel that bullish outlook. Nike, totally different kind of idea behind it, but it's a $147 billion company. Price earnings is low compared relatively to what it normally does. It's a global powerhouse, right? Apparently they're improving on their e-commerce presence based on a few things that I've read through. Fundamentals, consistent revenue growth, strong brand equity, undervalued relative to its historical averages. So technical considerations, oversold on its RSI, near strong support. But what's the risk on it? China's economy and competition from emerging brands. There's been a lot of, there's a lot of knockoff shit out there. Pardon my language. But there is. And the tariff stuff, things like that. Everybody's kind of affected by it, right? But there's always ways around it or things that they do to mitigate that. But again, Nike's huge. They're everywhere and everywhere. They're in every sport. And I just think they're, price-wise, it's just, I think you're getting it at a pretty good price right now, or we'll see. Visa, market cap $593 billion, price to earnings ratio 30. Global leader in digital payments, strong earnings growth, fundamentally high profit margins, strong free cash flow, which is great. Consumer spending rebound, right? Technical considerations, still in an uptrend, near key support. The regulatory scrutiny in digital payments, I think, along with some of the inflationary pressures, along with consumer spending habits, things like that, all tie into one another. That's definitely the risk. But financials overall, they're just, they're so strong. JP Morgan, that's always one of my favorites. Definitely pulling back in right now. That price is wrong. I think the other price was wrong too. Fundamentals high on return on equity, benefits from higher interest rates. Financials have been a bright spot in recent market weakness. Slower loan growth is the risk if rates stay too high for too long. Yeah, that can definitely affect them. Tier 2, strong value, turnaround potential. This one, Nike kind of falls in this a little bit too. I didn't really know where to put it. But Intel. Potential turnaround, AI, semiconductor manufacturing, foundry business, strong government backing, heavy AI investment, technical considerations, stock forming a base potentially, execution in regaining its semiconductor leadership. I don't think that'll really happen, but with the talks that have been going on, definitely looking like they can make a strong case for recovery this year. Bristol Myers. Why do I like it? Low valuation, strong dividend yield, pipeline of potential. It's in healthcare. P's relatively low. Fundamentals, consistent revenue growth, tracked valuation, very stable earnings. It's not the prettiest of things, but it's consistent and stable. And I think that's where money will, usually flows to in times of uncertainty if we continue to see some of that sell off. Technical considerations, stock is trying to bottom after a prolonged downtrend. Some of the risks, they've lost some exclusivity from some of their key drugs, so that's definitely concerning, but I'm sure they probably have something in the works, right? That's, all these companies been around for so long, they don't, have a $105 billion market cap by not doing something to make, continue their growth. MasterCard, falls in the same space as Visa, global payment processing leader, strong potential, transaction growth, high cash flow, strong uptrend, light pullback, high valuation compared to historical average. I don't love that. That's kind of why it's ranked lower on my list. Public Service Enterprise Group, PEG, utilities. Yep, stable dividend, defensive sector strength, reliable earnings, strong balance sheet, very stable price action, minimal volatility. There's not really much risk. I mean, it's just limited upside compared to some of the growth stuff. So, and then if that growth stuff becomes hot again and everyone's buying back into it, then utilities and all that, you'll just see kind of, flatlining. Tier 3, so definitely more cyclical, mid-tier growth. Stocks are sector dependent. Upside's going to be dependent on macro trends. So, but General Motors, they've got some EV growth, cheap valuation, strong revenue, growing EV market share. Definitely have been improving with that. Sideways action, but forming potential higher lows. Auto demand tied to economic cycles. Baker Hughes, BKR, energy demand remains strong, steady services revenue, fundamentals high, institutional ownership, definitely like that for a longer time frame. Stable revenue, energy stocks remain volatile but still trending up. Yes, dependent on oil prices or influenced by oil prices. Lennar Homes, industrials. Why? Strong housing demand despite rate concerns. Still going on. Definitely going to see a little bit more of that as we get, a couple more reports out. Higher revenue growth, cheap valuation for a leading home builder. Technical considerations, potential continuation if interest rates fears ease, for sure. They have the ability for those buy down programs, things like that. That's why I think new homes are continuing to beat out, whereas other, homes that have already been built and are on the markets where the rates are just at the market, whatever it is. New homes have the ability to do these buy down rate programs. They're offered everywhere if you drive around and see them. They got the cash behind it and they can sell those loans off to the banks later on. So they definitely have a little bit of a stronger case right now for beating out or maintaining their position, because new homes, homes are always in demand, right? And one thing, it's just always out there, but they're beating out homes that are older because of their ability to, you can go buy one of these and get a locked in rate for the next 5 years or whatever. And they're not even doing, a lot of people always go, they're doing adjustable rates again. A lot of them, they actually offer rates that are not adjustable. They're going to be fixed, but they have a fixed plan. I've kind of looked at it. I've talked to a few people that have purchased new homes recently. 5 years now, we'll see what happens. Yes, when those rates do change. But for the time being, people are still buying and they're still building a lot. So definitely anything related to home building, definitely still interesting. BHP, Basic Materials, global leader in mining, strong dividends, solid balance sheet, high cash flow, stabilizing after pullback. And then Pfizer, another healthcare, undervalued, strong pipeline despite the COVID vaccine and revenue declines, solid cash flow, good dividend yield. Trying to bottom after a long-term downtrend. Their risk, they have declining COVID-related revenue, but at the end of the day, they're pharmaceuticals, right? Healthcare. Okay, I'm gonna move this over. We'll pull up some charts here and kind of show you what I'm looking at on all of them. So with Nike, do I have let's pull these up. Yeah, so I don't love that it's very extended from its 200 week, let alone, let's look at its 200 day. It's probably right at the money. Okay, this is going to get more interesting. So if we can see it start to stabilize out in here, I generally don't love using simple moving averages, but when you're talking higher time frame and looking to hold multi-week, and honestly I'm looking to hold these types of stocks, I'm thinking about even longer than that. I will then begin to respect the higher time frame simple moving averages. So right now we are right at the 200 SMA on a daily time frame, so that anything in that looks like I'm going to give a lot of respect to that room of 68 you know, between 76, opportunity of buying in here if we see it kind of stabilize or, you know, whatever. Any sort of pullback to that 20-day and even that, what is that, 100 or 50, the 50-day, definitely be looking at adding. So what I'll do is I'll break up my entries based on quarters, or even, you know, even a little less than that, depending on what I'm seeing kind of day of or week of, or, you know, if nothing's really changed news wise, yeah, anything that's pulling back into those levels, I'll just be buying basically at whatever that pricing is, as I begin to build a position. So whatever that size is at that time, and then continue to add to it after I start to see the follow through as well. So I even done it in tenths or 15ths of the size that I want to get into. Like, I don't plan on being fully into the position for, you know, a couple weeks, and that's when I say, okay, now I'm in and I'm planning on holding, you know, 1 to 2 weeks. Obviously with stop losses, you know, set up at certain points, but it's more about building off of the strength you're seeing, and those retests and reclaims of those levels. So right now it's right at the 200-day simple moving average. Last time we got in there, we definitely sold off after gapping up and or grinding much higher and then, you know, failing. But again, we are on a different kind of pace here. We are down at a level that we have not seen for a long time. It could take a while for me to actually begin to build a position. It just depends. But I'm just kind of giving you guys an idea of what I'm looking at, and considering fundamentally on top of, you know, technically as well. So let's just go from the top down. Sorry, let me scroll to my list. Let's look at Amazon. Amazon breaking through that 20-week simple moving average in the Bollinger Bands. Let's see how this does. We might see some continued pullback. That would be cool. I would like it. I mean, as you can see, right, let's just draw a simple trend line. Look at, you know, these last few times we've had these sort of pullbacks. You know, I'm not saying it's going to get, I'm not a big believer on like, it's going to get right to this trend line, I'm going to buy right here. No. But you can see we dip down into these lows, and it rips for weeks on end. So I want to see something like that, right? I want to see the MACD, the, you know, moving average, divergence cross over, show weakness, and then I want to see price action wise on a weekly time frame or even 2-week time frame get really strong, and then start looking to buy in on those following weeks of where it's settling, right? And it's kind of, you know, just consolidating before that continuation. That's what I want to look for. So it's just on my radar now as we start to pull back in, because at the end of the day, I mean, it's still beat on earnings, beat on revenue, beat on earnings, beat on revenue, missed by a slight miss on revenue, beat on earnings, beat. I mean, its real last one that it really missed on was back in February 23. So we have earnings coming up not until April. We got some time, but I mean, it's Amazon, right? So got to zoom out and think bigger time frame. You know, the market right now overall selling off. What's going to be the things that brings the market back to, you know, new highs? It's going to be the big companies that have the earning potential. Meta, kind of same thing. Yeah, I definitely could see better pullback or continuation. I'm not saying I'm short or anything like that. Like, a lot of people are like, oh, short, like it's going down to 600 or whatever. It for sure could. I just wouldn't, you know, you could be wrong one day or overnight and the thing is just ripping the highs, so I'm not going to do that. I'm not going to bet against a stock that does, you know, from 100 to 7, you know, in a matter of years or whatever. Nike, we already looked at Nike, yeah. So a little, way different context. Definitely in a maintained downtrend. You got to really see that breakthrough, consolidate. You know, I'm probably going to be looking at it more of a monthly time frame off this. Oh, that's interesting, right? And this is the 200-month moving average. Very interesting. So see if that, you know, stays above that. Let's see what else we got here. These put V, right? A little extended for my liking, even on a weekly time frame. Definitely want to see this kind of pull back in. But same thing, right? Earnings just continuing to beat. It's got a little dividend it pays as well. Yeah. Did they increase their dividend? Yeah, they increased it slightly. Yeah. So, I don't know. Company-wise, I like it. But again, financials could, be the rock, so to speak, and maintain. JP Morgan's kind of a little boat right now, pulling back even more. I think we see a test of these. I don't know where I got 179 or how that happened on my notes. I knew that was wrong immediately. I was like, I'm pretty sure it was like 260, 270, but whatever. Yeah, we could see a little bit more pullback. I would like it to suck in a little more and then see that strength come in and go from there. Again, I'm not talking about like I'm just buying tomorrow. I'm just saying these are on my watch for looking for the strength. Intel, same thing, right? Earnings, they've had some misses, very disappointing on a couple. But I think the big catalyst was that company that reportedly, or a couple of companies, I forgot exactly who. Let's look it up real quick. Who is rumored to buy out Intel? Oh, rumors of Taiwanese semiconductor manufacturing giant TSMC acquiring at least 20% of Intel's foundry division and a Broadcom play for Intel's product division by 38.5% increase over 5 days. This was 3 days ago. Yeah, so Ohio Intel plant construction, blah, 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 amid rumors of foreign buyouts. So they're even building a new plant in Ohio. So definitely could see a comeback story, right? It's been around forever, and it's down at lows that we haven't seen in, since 2012, 13, 14, 15. Yeah, decade lows. So a little different context, a little different idea behind it, but nonetheless interesting. BMY. Let's reset this chart view. We are also approaching the 200-week moving average. Got a little bit of room in there for it. So we'll see. I'm going to keep that on watch. MA, yeah, financials all just chilling at those highs. Can see continuation if everything else is getting weak, right? If we start to see the continuation amidst everyone else selling off, that'll give you your confirmation. And PEG, Public Service Enterprise Group, yeah, I like it. We got earnings coming up tomorrow, so definitely be interested in that. GM, I'm not going to go through all of them here. You can kind of get the idea. Again, I'm not telling you like, buy in here, buy there. I'm just telling you what's interesting me based on fundamentals, based on a little bit of technical analysis, and just looking for those opportunities. GM is definitely cyclical, so I want to see consumer spending habits improve a little bit, but they are innovating and they seem to be doing a little bit better than some of their competitors, just based on a financial standpoint. Baker Hughes, oil, yeah, if oil continues to climb, this will definitely be a continuation if we see that come through. So anyways, I think that's going to do it for now. I'll show you on a screener as well what it looks like. Again, you can go to FinViz. Again, I play around with all of them, but this is just kind of how I brought up. Most of the ones I'm looking at or talking about here, they all fall into line, along with some of my own additions, just based on, again, these are filters, they're kind of guidelines and us hard rules. One little metric in here may rule out one of the other stocks that I was talking about. So I'm going to make exceptions based on other things, right? A little give and take. But I appreciate, if you have any comments, like, subscribe, any feedback, greatly appreciated. Thanks. Bye.